Hello, welcome to Global Weltrade Synthetic Signal Provider Service. In today's video, I'm gonna teach you about color trading in Forex synthetic market, Weltrade Broker. If this is your first time of visiting this channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to refer this channel to your network so that YouTube will push us to a high level of audience. Today's topic is very crucial, and I think if you really want to make the most of this market, the issue of color should be one of your priorities, because if you cannot actually understand the meaning of those colors, it might lead to a lot of losses, and it will actually reduce your profit curve. So I will start by theoretical part, and then I go to chart for application. Take for instance, we'll be using daily time frame, because at lower time frames, less than daily time frame, we will not be able to get consistencies in the directions. Okay, so if we have a typical daily candle, you see, from daily, weekly, and monthly candle we shall use. So this is, we will work on daily and maybe talk more on monthly. So this is a daily candle. This is a daily candle. This is a daily candle. Okay, now the color of this candle is red, meaning that it is a bearish candle. It's red, it is a bearish candle. So this is daily, the daily time frame. Okay, so the type of candle we shall be considering should be an active candle in that time frame of analysis, which is daily or weekly or monthly, and the current length of the body of that candle is at least 2 times the length of the wicks. Okay, so to make it more realistic, because when we use 2 times it may have some errors, so 3 times. Okay, so when you measure the length of the wick, you track the length of the wick, measuring it from the open to the high price, and the length of the low. This one is the length of the high, the length of the low. So the wicks are lows and the high, right? So you measure the length of the low and the length of the high. Okay, the total length, let's assume if we measure this and measure this, if you add it together, you have something like 20 pips. Okay, then the body length of the candle should be 60 pips. That shows that there is volume, there is enough activity represented by that color. So if after you have done this and the color is red, it means that the dominant activity in that time frame is the bears or the sellers. If you see it in the daily time frame, it is not as strong as if you see it in the weekly time frame, and not as strong as if you see it in the monthly time frame. But when the weekly, the daily, when the monthly and the daily, and when the monthly, weekly, daily are actually showing you the same color and the same width to body ratio. Okay, we are going to use body to width ratio. So the length of the body is to total length of the width. So if is giving you the same criteria we discussed here, it's actually showing you that that particular participant represented by that color are very strong, and you should look opportunity in their direction. So if it is red, it is bearish. Red is represent bearish market, meaning sellers, and blue or green represent, or white represent bulls or bullish market or buyers. Okay. This can be used as a shake when you have performed all the technical analysis. Then we discover that in the daily you wanted to buy the market, but you discover that the daily is red. What it means that once you buy that market, it will sell for some time and then take your stop loss out. Maybe it can sell for up to 2 days or more. Because a bearish day, if today is bearish, that it means tomorrow is going to be bearish, because you don't know where the market is heading to. It's probably trying to go and grab liquidity, which is unidentifiable by some beginner traders. Okay, and based on the theory of active path, the market tends to continue indefinitely in a direction that it is currently acting. So a bearish market will have that tendency to remain bearish for a very long period of time. The same thing will happen to a bullish market, so long it happens at higher time frame like daily, weekly, and monthly. So let's consider a bullish market. So let's change the color to blue. So we have this candle. Then this is a wick. Right here, you measure the length of the body. So the length, let's say the length is 30 pips, depending on how you measure pips. But for synthetic market like here in Weltrade Broker, the pip is just the difference between two prices. So we use the open and close price. So this market open here and closes here. So the difference between the two prices is the 30 pips. So you measure this, you trace this, and you also find the distance between the open and the high, and you also measure this, the distance between the low and the close and the open price. Open price, the distance between the low and the open price. Okay, you measure it. So let's assume that this one is 5 pip, this one is 5 pip, this one is 5 pip, and this one is 5 pip approximately. Let's assume that they're almost equal. It's possible. So when you add 5 plus 5, 10, then BW ratio, body to wick ratio, okay, will now be 30/10, which is equals to 3. But I've already said that the body to wick ratio should be at least 3 times, like it should be at least 3. That the ratio should be 3. That is 1:3 or like 3. Okay. If it is less than 3, maybe between 2 and 3, it might be acceptable, but it will not be as strong as if it is 3 or more. Okay, so that's good. So if you see this in monthly, like if the time frame of observation matters, where you are actually trying to believe in the market. So if you see this in the daily, it shows that throughout that day the market have high probability to keep buying. But if you do this measurement in the day, in the week, and in the month, and they have the same color, and they tend to converge to the same body to week ratio, it means you have what you call an infinite strength in that direction, meaning that the market is going to keep going in that direction for a very long period of time that you cannot be able to predict. So this actually destroyed the notion of market reversal. And what is a artificial reversal? Is when you actually look on the market and you feel pity for the market, and you feel like this market is overtraded, and you tend to induce reversal on the market. You are the one doing that reversal. It does not matter whether you are doing it during a retracement event or during a impulse event or pullback event, which is just a retracement. It doesn't matter. Every action have all it takes to make you rich or make you lose. So you have to treat all action as to have equal importance or equal power to either make you profit or lose, or make you losses. Okay, so right now I'll be going to the chart to see some examples. Or you see, there is another rule here, that there is another theory here, that each time there is a new idea, each time there is a new strategy, or if there is a new principle that seems to work, that has some tendency to make you profit, it tends to make you lose more money if you just try to use it alone. Okay, so for you to use this, for this thing to make sense, you have to combine it with other known workings, technical tools for confirmation. Okay, for you to confirm that this conclusion is real. Okay, so that's good. Okay, right now we measure this, measure from here. This is 940. So the week here, we have to measure here. This is 0. It doesn't have a week, so it's still going to be, so 0 plus 940 is 940. Now we measure from here to here. That's the body. We'll have 2,000, approximately 2,400. So when you do 2,400 divided by 940, that will give us 2.55. Okay, 2.55. Now 2.55 is approximately 3. So when you get 2 point something, take the approximation, because the market is oscillating and vibratory in nature, so you don't need to take it so personal that it should be exactly 3. So this shows that this market is like, let's assume you got a buy signal. You have already predicted a buy signal. So because this is used as a shake, so you have to cross-check the color of some higher time frame. So because this is red, that your buy should not be taken, because currently this market is doing something different. Okay, so it's a filter. It filters errors that you cannot detect. Okay, it filters error that you cannot be able to detect. In most cases, moving averages can be used for error filtering. Okay, but I don't want to talk about that. Maybe I will talk about that in future. Okay, but with this color, you can filter errors. Then for you to know that this makes much sense, you go to line chart. And then when you go to line chart, you discover that as this market is pointing downwards, it doesn't make sense to buy, even though it might present a buy signal to you. I didn't say that the signal is buyable. What I'm saying is, let's assume that you have already decided to buy, Because of this, we see that your buy is going to be postponed. So this idea will help you for error filtering and valid conclusion. Okay. Now, if we go to the weekly time frame, you notice that we're also having some idea here. We can measure this to give us 4,000, 3,500. When you rounded it down, 3,500, I rounded it down. And so I just rounded it off. Like if you round it off, it will be 3,500. Then this one is 800. So if we have 3,000 plus 3,500 plus 800, that's 4,300. Then you measure the body. When you measure the body, we're having around, the body is giving us around 5,003. Okay, so we will have 4,300. We have 5,300 divided by 4,000. 4,000. It was 4,300. I'm just using round numbers, okay, to nearest 100. So we have 1.23. So this is, it shows that trying to sell in the week does not really make sense, because this is far from 3. It's not even between 3 and 2. It's very, very far. So trying to sell in the week is not making sense. So this can even help you to know the viability of your signal. One thing is to know signal. The other thing is to know if this will just be a small profit signal and a big loss. So this is showing that in the week, if we want to sell, for instance, like if we see because for me I'm looking for a sell in this trade. So if we wanted to sell, it's not making sense to sell in the week. Then if we go to the month and then we do the same measurement, and then we have this 3,500, and then we'll come and do for this side, we have almost 3,000. So that is 6,500. This is the total width. Then you measure the body. So we have 18,687. 18,687 divided by 6,500. So this is almost close to 3. 2.87 is the same, is approximately equal to 3. So this shows that we can sell this market in the week. There's chances to sell this market in the week if we are looking for a sell. Let's assume you have done other technical analysis. You are looking for a sell. There is probability to sell it in the month. So the month provides sell, the week did not provide sell, and the daily provides sell. So the fact that the week did not provide sell is a big issue. Okay, so you can see that this is just a judgmental idea to judge, to prove whether your signal is going to work or fail. For me, I will not look for sell until the week shows selling pressure. All of this higher time frame, the daily, the weekly, and the monthly is supposed to give the same results for this thing to work. And if the other way, you are looking for a buy and the color is not a bullish color, like the 3 time frame are not showing buy colors, then why should you buy? It doesn't make sense to buy. It is better to buy this market along this path when, let's say, in other time frame all the color are just blue. It's better to buy it than to buy it along this path. So I'll be ending this video. Make sure you are proactive. Make sure you subscribe to our VIP services, enroll for courses and mentorship. Bye for now.